the metals are telling us that real stuff out there is going up. And by the way, it's soft commodities too, not across the board, but soybeans are way up. Some other prices have started to move as well. And of course, we've seen, at least in the United States, where there's been this exodus from the cities, we've seen real estate responding. So it's interesting to me. You can look at any one of these pieces and say, oh, that's because of this, or that's because of that. But if you look at the big picture, you're seeing, I think, an incipient response to higher inflation. People are seeing the writing on the wall. I mean, heck, you have Citi and Bank of America calling for $2,500 or $3,000 gold. The average person, I think, is starting to. I mean, people aren't that dumb. I mean, people like to dismiss the masses as being dumb masses, but you have trillions and trillions of dollars of new money created out of thin air, and I think the ordinary person is quite well equipped to understand the implications of that. A very key principle in political philosophy and liberty. I voted with my feet. It's a peaceful, nonviolent way of, shopping for governments or forcing governments to see me as a customer and perhaps adapt to me as a customer with not a shot being fired. I think this is profoundly important. I think it's ethical. I think it's a positive good in the world for people to vote with their feet. And I find it really interesting that millionaires and billionaires are fleeing California these days in droves. We got Musk going to Texas. Somebody else went to Texas recently. Ellison just went to Hawaii.
Time to protect your future with physical gold and silver? Miles Franklin Precious Metals has 30 years in the business. A+ rated and accredited by the Better Business Bureau. 0 customer complaints. Licensed and bonded. Insured physical delivery to your home or secure vault storage or IRAs. Excellent prices. Full privacy and off-web confidentiality. Payment by check, money order, ACH, or bank wire. Personalized service. Satisfaction guaranteed. Call 419-819-9209 or 310-562-6400 or email kaiser@milesfranklin.com. Welcome back to Liberty and Finance. We have a returning guest. Lobo Tiggre, or Louis James, is the editor of The Independent Speculator. He joins us again this Tuesday, December 15, 2020. Lobo, thank you for coming back on.
Thank you. It's good to be back on the show.
We had quite a few questions submitted for you from viewers, but first I wanted to get into some topics that partially springboard off of an interesting venue that you and I were both panel members on last night in the Miles Franklin Mugs and Metals panel, where we had quite a few people on there, analysts with different perspectives. One of the provocative thoughts that you brought forward in that interview and discussion was about the bear case for gold in 2021, looking at the macro factors that could affect pulling forward or delaying activity, economic activity, money velocity, etc., and how those might affect not only the broader economy, but specifically the precious metals. I really thought that was intriguing, and I would like if you could bring that forward so at least our viewers have a chance to think about that side, because so often we get presented with a fairly one-sided view of the potential future ways that things could play out. And we certainly got surprised in 2011 when things did about face for the next most of a decade. So here we are again knocking on the door, in the case of gold, of previous nominal all-time highs, as we did a few, over the past quarter or so. Silver not yet, but high expectations and high hopes on the part of many people. Could you enlighten us on what this thought experiment you've been proposing brings forth in terms of this bear case that we should consider for metals in next year?
Sure. Well, I'm glad you frame it that way, and I'm glad you brought up the reminder of what happened after 2011. And I think that's really worth everybody, who's Liberty and Finance. I'm going to assume 99.999 pure audience is understands gold and silver as monetary metals. They're with us on that, so I don't need to explain that. But the 2011 context is that the kind of arguments that people are making now for why gold and silver should go higher, all the money printing, unprecedented, off the charts. We were saying the same things in 2011 after the crisis of 2008, and we were wrong. Maybe you could argue, big picture over the decades, we weren't wrong. It just took a breather. Gold corrected. But, a 5-year correction is pretty serious. And if you're an investor with leverage, betting wrong for 5 years is devastating. So I think it's very important to consider the possibility, can we be wrong? Or at least wrong enough that it matters to our investments for a period of time. And I don't believe this. I'm not a bear. So I'm not saying this is what's going to happen. It's going to be bad, run for the hills. I'm saying that as a bull, I don't want to be a blind bull. I want to look and make sure that I think about what could go wrong. So if it does start going wrong, I'm forewarned, right? I can see the signs and say, oh, look, this is bad. Let's make sure we cover. So the bear case is very simply that monetary metals were already on an upward trend long before anybody heard of COVID-19. I think that without all the craziness that happened in 2020, gold prices would be more or less where they are now. I'm not sure about silver because it's more volatile. But ever since the Powell pivot, they've been on an upward trend. And the bear case is, though, that COVID-19 did happen. It did bring forward a lot of fiscal and monetary policy that wouldn't have happened, or at least not so quickly. Like, I'm going to assume, again, that a fair amount of the audience agrees with me that a lot of the problems that caused the crash of 2008 were never fixed. If anything, they've been made worse. They've been papered over, kicked down the road. And the Piper's bill was starting to come due a little bit, it seemed, and there's been concern about that since 2018, the Powell pivot. But the COVID situation in 2020 certainly had policymakers do a lot that they wouldn't have done, at least not so quickly, right? The Fed in particular was already, giving up on the idea they could tighten rates. But when the COVID situation hit, they went boom, straight to zero, just like that, lickety split. That's the sort of thing I'm talking about. So,
and also they were on this gradual normalization of their balance sheet intention and just cut that off and record expansion of the balance sheet.
And of course, the fiscal response from Congress was phenomenal. Trillions of dollars, and we're looking at trillions more. And we are looking at trillions more, and the Fed has said they're not even thinking about raising rates. So I'm not a bear, but the case is that as the COVID situation is resolved, and as the world seems to return to normal, you could have a lot of pent-up demand, a lot of people that didn't go on holidays, didn't spend on XYZ, or had no job, and now they do again next year, hopefully. The recovery plus the pent-up demand from the COVID year could cause a huge apparent surge in economic activity. We could, by next summer, we have all these vaccines out, we have people saying it's summertime, the worst is behind us. You could have such an apparent boom in economic activity that you could have policymakers talk about taking away the punch bowl. I don't think the Fed would. It'll be interesting to see what happens. But you could get noise along those lines. And what was an extra tailwind on top of the trend in 2020 could turn into a headwind in 2021, particularly over the summer. And that could really that could put gold and silver on the skids for a while. I'm not saying that they will go down. I'm saying, I don't want to be blind to this. And if the data starts showing that this is happening, and we've seen it so strongly this year, they start talking about, more trillions, blah, 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 ooh, gold and silver goes up. They start saying, oh, wait a minute, negotiations are tough, ooh, gold and silver go down. It shouldn't be that way. But right now, that is our context. So if they start talking that, oh, we don't need any more stimulus, the wrong word again, but that's the word they use, that could be a substantial headwind for gold and silver next summer. Now, of course, if that happens, I'm a buyer, right? I'd love to add to my stacks. It would be a temporary thing. But if, as a stock investor, I could see my stocks really fall off a cliff. So the bottom line here is not abandon your gold and silver. The bottom line is look for these warning signs. And if it happens, I have a stop strategy I call the Upside Maximizer. It's available for free, a download on my website. You can look at the Upside Maximizer strategy. And the idea there is simply a creative use of stops to make sure that we don't let our big wins slip through our fingers. And a lot of us have had tremendous wins in 2020. Gold and silver have done so well. The stocks have, the better ones at least, have done really well. And that's really the bottom line here. So I'm not telling anybody to sell gold or silver. I'm saying if this headwind materializes, don't let your big win slip through your fingers.
Well, it is interesting and worthwhile to go through the thought experiment of considering opposite cases from what you consider to be the predominant narrative or the thought process that you're going through, just at least to test your own strength and find if there's any gaps in the logic or if there's any other eventualities. And then the best that can happen from that is that you make Plan B. I mean, that's part of what we talk about here. Our original channel name before Liberty and Finance was Reluctant Preppers, and part about being prepared is being that awareness and saying, okay, if this is what I believe is going to be the predominant, the most likely scenario, but what if that doesn't play out, and what if that doesn't play out, and what if that doesn't play out? What are my plans B, C, and D? And that allows you to make those additional preparations, should you choose to cover different eventualities. So thank you for bringing that forward. And we'll put a link in the description.
Form of insurance done again. You don't want to have to use insurance, right? But you want to have it.
Right. I'll make sure to put the link in the description to your website so that people can get to the, what did you call it, the calculator?
Upside Maximizer.
Upside Maximizer.
Right at the top of the homepage.
All right. And along the way, you mentioned this idea of broad market actions that could impact the pulling forward or the lack thereof becoming a headwind. And how it's affected so far the monetary metals, gold and silver. What other people are talking about is some additional metals like platinum, palladium, some of the other pseudo-monetary metals. Can you talk to us about the action you've been seeing in those and what you think is driving that and where you see that heading?
Yeah, I'm glad you said pseudo, because this is one reason why I avoid the use of the word precious metals. That's not really the key distinguishing characteristic. I mean, who cares how precious they are? The point is that gold and silver are useful as money. Rhodium, not so much. Right? The fact that it's very expensive, that it's precious, doesn't make it a monetary metal. And I would make the same case for platinum and palladium. They are expensive, they're rare, but they're silvery metals like many others, and they're hard to identify. And they've never been in circulation in any significant way. So they're not monetary metals. They are industrial metals, and we see the prices moving. They have not moved in response to monetary policy. They have moved in response to fiscal policy. They've moved as a commodity would, so that's really important. You look at anything that would be inflationary is good for any real asset, and that includes commodities writ large. So yes, it seems like at times that you get this. That you see platinum moving like it was gold or silver, but it's not. It's really the commodities that are driving that. And the key point there is that gold and silver, yes, they're monetary metals, they're also commodities, and sometimes you get these commodity supercycles where they all move together. But I think it's very important not to confuse platinum and palladium with gold or silver. We have seen major disconnects between these prices in recent years, in particular platinum. It's really striking to see platinum cheaper than palladium, cheaper than gold, staying there for years. It's amazing the credit card companies haven't figured out what to do with their platinum cards since platinum is no longer the top tier there. And the reason for this is simple. They're industrial metals. The reason why palladium prices are so high was a supply crunch combined with a greater demand after the Dieselgate scandal and, the demand for palladium, and particularly in China for gas-powered cars, that went through the roof at a time there was supply constraints. So has nothing to do with the monetary phenomenon we're talking about. So we could talk a long time about the details and ins and outs of platinum and palladium. The main message I want to communicate to the audience is that these are industrial metals, and the fact that they're up recently has more to do with the commodity supercycle and the perception that the economy's on the rebound, everything's getting better, particularly in Asia. We've beaten COVID-19, woohoo. So economy's recovering, and that's good for industrial metals.
We've spoken with Rick Rule, and he talks about the history of this re-engineering to get out of platinum and into palladium for catalytic converters, and that now that the prices have switched, that maybe there'll be the move back to do bomb substitution in the case of manufacturing to favor more platinum if it's lower cost. Do you see that happening going forward?
I can, but I'm a little skeptical of that. No, let me not hedge my punches. I am skeptical of that. It takes time. It's not just a matter of putting platinum in the machine instead of palladium and just substituting it. The metals do have slightly different characteristics. They have different heat tolerances. Where you put the catalytic converter on the car matters in terms of what's in it, the mixture of metals in it. So you have to not just change what goes into the catalytic converter, but you have to change the design of the car that the catalytic converter goes on. So it's pretty involved. And it could well be that by the time you go and make the switch, it takes a couple years, and then prices reverse themselves again. I'm not a metallurgist, so here I go. I have to trust what others have told me who are, and I understand that actually Palladium has now, years into this switch, a lot of science has been done, and it turns out that actually Palladium is better than platinum in many of these applications. So even if it may be worth a higher price in some cases, so the higher price alone may not cause that reversal. Of course, at 2-to-1, I expect people will try. We may see some movement in this direction, but I would be surprised actually if it just flipped and went totally back to platinum the way it was before. I don't expect that.
You mentioned a few moments ago about a commodity supercycle. Can you describe to people what you mean by that and what you see happening?
Right. It's a fairly well-known documented trend. You can look for charts online for this, and you'll see that the commodities tend to move together. You'll see, even though we like to think that, say, the monetary metals and the industrial metals, you'd think they would be contracyclical, right? The monetary metals would be up in times of crisis, but because of economic crisis, less demand for industrial metals, they would go down. And in brief moments of acute crisis, that's true. But more broadly speaking, over the years and decades, actually commodities, including gold and silver, tend to cycle up and down together. And I think that's actually a more broader reflection of inflation, actually. Anything real will tend to move in response to inflation or the fear of inflation as well. So we are seeing, it's quite interesting, actually. You would think that with all the damage from the economic shutdowns, a lot of people have been worried about deflation. Conventional economics says, less economic activity, got to have deflation. But that's not what the metals prices are telling us. Not just gold and silver being up, but copper, nickel, iron. The metals are telling us that real stuff out there is going up. And by the way, it's soft commodities too, not across the board, but soybeans are way up. Some other prices have started to move as well. And of course, we've seen, at least in the United States, where there's been this exodus from the cities, we've seen real estate responding. So it's interesting to me. You can look at any one of these pieces and say, that's because of this, or that's because of that. But if you look at the big picture, you're seeing, I think, an incipient response to higher inflation. People are seeing the writing on the wall. I mean, heck, you have Citi and Bank of America calling for $2,500 or $3,000 gold. The average person, I think, is starting to. People aren't that dumb. People like to dismiss the masses as being dumb masses, but you have trillions and trillions of dollars of new money created out of thin air, and I think the ordinary person is quite well equipped to understand the implications of that.
I hope so, especially because it seems like there's often quite a bit of misdirection or neglect that we're subject to if we only depend on mainstream sources. That's why we're here doing what we're doing in the middle of the day here, taking time to try to get some independent voices out there. So glad for your presence here with us. We do have some specific questions from viewers. One of the things you mentioned along the way made me remember a conversation we had with Rick Rule, where he said, if you're going to be, you mentioned about 5 years or more was a long time to be having the wrong mental model of which way metals were going to go after 2011. He said, as a uranium investor, you have to be ready to be wrong for a long time. Although we've certainly seen some movement recently. In fact, that's one of the questions here from a viewer. Menachem Saler says, Lobo, in the medium to long term, do you see extreme broad market valuation as a significant risk to deeply undervalued sectors like uranium? Are you concerned about potential for another indiscriminate liquidity crunch?
Yes and yes, but on the first yes, it's a qualified yes. So let's pick that apart. We have seen very clearly that every time there is a major waterfall event in the markets around the world, everything gets whacked. Even the so-called safe haven assets, they are safe havens. It's not that they suddenly become unsafe havens. It's that it's a liquidity crunch. People have access to liquidity to pay off their margin calls or whatever else their urgent needs are. In that environment, if gold gets sold off because people need something that people will buy, that's gold actually doing its job. That's being the refuge of last recourse. So, don't be worried about that, but don't kid yourself that it won't happen. There was a fair amount of talk after the crash earlier this year in March that a lot of that excessive leverage was squeezed out of the system, and therefore gold would now be insulated. If there was another big step down, the fair weather friends were all out, so gold was more solid. I think that might have been true in April or May, but not anymore. There's been such irrational exuberance rushing back into the markets. I mean, just look at the valuations. They're, even the cheerleaders on mainstream financial media, they all kind of scratch their heads and talk about how, these valuations are kind of lofty, but they're going higher, right? That doesn't scare them. But clearly there is risk of another, gigantic liquidity crunch if the new leverage that's rushed back into the system gets squozen out again, and that would affect everything. Now, I think that would be short term, and I think it would be a terrific buying opportunity on the better quality assets. Now, if I talked about commodity supercycle. If there is a stock market crash and if the economy seems to be falling apart, that could prove a headwind for many things, even if they're already undervalued. If cattle is already undervalued and the world goes into reverse, cattle prices could go lower and stay there for a long time. But I think monetary metals are different, and I think uranium is different. Almost nothing else, not even oil. Right now, those are the only things that I would be willing to bet and put my own money into in the midst of a crash, because monetary metals, for reasons I don't think I need to explain, that's different, and a temporary liquidity crunch is a buying opportunity. Uranium is different because it's still irreplaceable for many years to come, and it's responsible for baseload energy, not exclusively, but that's where it does its best job. Your nuclear power plants, they're on all the time, 24/7, 365. It's not. I'm not just comparing them to windmills and solar farms. I'm comparing them to other. Even hydropower can have a year where there's less rain can affect your hydropower. The nuclear power plant is just solid in terms of its output all the time, and that's what you want to keep the lights on in your inner cities and your hospitals and so on. And that makes demand for uranium different from other energy commodities. It's less subject to volatility around the edges. It's that core that's always there. And uranium prices are already below the cost of production. So I'm quite bullish on uranium. I think, again, can't stress this enough. If there is a big waterfall event in the markets, everything gets whacked temporarily. But I think that the monetary metals rebound quickly, and I actually think that uranium likely does too. It's on its way upward, and it has a lot higher to go, and I think it's more insulated than any other energy or other commodity out there.
On that same point, the same viewer has a follow-up question. In the short term, have the uranium equities climbed too quickly over the past few weeks?
Yeah, I think so. My uranium bug friends, they love to quote me on Twitter and Facebook when I say great things about uranium, and they don't quote me so much when I say, hey, you know what, maybe it's gotten a little bit ahead of itself. But the fact is that uranium prices have gone sideways over the last month. They lost a little altitude, actually. They blipped up in the last day or so, but not significantly. We're still around $30. We haven't gone anywhere really for a long time, but the stocks have gone vertical. Some of them have doubled over the last couple of weeks, while the price of uranium itself has not. So clearly, price and value, the value proposition in a uranium company hasn't changed, but the price has. And that is a warning sign. Now, I think it could go much higher. I would like to see uranium prices start to move to backfill that value. And actually with Cameco shutting down their flagship Cigar Lake mine, which single-handedly provides a large double-digit chunk of the world's annual supply of uranium. So shutting that down again is a big deal. It's a recent development. And that's already on a 2020 that is seeing serious uranium mine supply deficits. So that's a good thing, but the price hasn't moved yet, whereas the share prices in the companies have. So I have to say, yes, too quickly, too much optimism here. Why? Well, the U.S. A Senate committee approved this idea of Trump's of creating this uranium strategic stockpile. And Biden has talked about advanced nuclear. He's perceived as being pro-nuclear for green reasons. So there's a lot of optimism that the U.S. government is going to start buying a bunch of uranium. This hasn't happened yet. Right? A committee approved something. That doesn't mean it's law. And certainly the current Congress, I think, is unlikely to be, the House is unlikely to be cooperative with any of Trump's ideas. If Biden makes this idea his own, and he's sworn in as now expected, thanks to the Electoral College vote just yesterday, if that happens, maybe this all comes together. Great. I'm not, as an investor in uranium stocks, I'm not opposed. Actually, as a person interested in liberty as well as finance, I actually am opposed. I don't think the government has any business getting involved in this market. It should be a free market. But anyway, it's going to do whatever it does. It's being priced in advance. If there's any disappointment, that is dangerous. All of these stocks that have gone up 50%, 100% in a couple of weeks could easily reverse that, as they did after the Nuclear Fuel Working Group disappointed, as they did after the Section 232 scuffle disappointed. Market has gotten ahead of itself. I'm not saying it will therefore decline. I'm saying it is therefore much riskier. It's a time to be using upside maximizers to lock in your gains rather than looking to put more risk on, in my view.
In that same vein, I wanted to follow up with another question from Michael Garcia, looking ahead to where you will think that it's the right time for people to hedge their gold and silver mining stocks in the same way. What's Lobo's exit strategy for gold and silver mining stocks is the question.
Well, hi, Mike. I recognize the name as a subscriber. Thank you. The exit strategy actually is much the same. Well, for one, and I think he said gold and silver stocks, which is an important distinction, right? I don't ever plan on selling any gold or silver based on prices going down. If they go down, I just want to buy more. And that's not a religion. It's not because it's because I see them as savings. And if something that I want to save, it never rots, never goes bad, right? It always has some intrinsic value. If something that I value goes on sale, I want more of it. So set that aside. I'm not telling anybody to sell any gold or silver, unless you have any reason that you would dip into savings, right? If you have a fire, no insurance, you need to rebuild the house, you dip into savings for that, or a wonderful opportunity, buy a new house. That's what savings are for. It has nothing to do with the price going up and down. The stocks are another matter, and since they typically offer such leverage to price movements, if gold and silver go into reverse, drop 30%, say the way they did in 2008, they do that in 2021. The stocks are going to drop 50%, 75%. They're going to get clobbered. And all I'm saying is there's no need to suffer that with your stock portfolio. And as I've said, my suggested strategy for this is to use stops in the way that I call the upside maximizer. So the answer to Mike is I don't see myself being such a genius that I can predict the top or the turning point when it's ideal to get out. Instead, I expect to be stopped out. I expect my upside maximizer trigger levels to say, this has gone into reverse, I'm out. Or at least I've taken profits so that I can't get hurt on whatever position is left. And that's the way I would expect that to happen. If my bear case scenario happens, I expect to be stopped out of more and more positions until my portfolio is greatly reduced. And by the way, in terms of preparing, sorry, I'll let you have a chance, done again, but I think this is a really key point. In terms of preparing, I'm not just buying everything that's going up. Oh, this stock is up, I'm going to jump on that bandwagon. The only things I'm willing to buy now, and I am, tax law season as you and I speak, there are things on my shopping list I'm willing to buy. I'm only willing to buy things that I think could survive the bear case scenario that I'm outlining. I'm not looking to buy the more speculative things that need gold prices to go higher. I'm willing to buy great companies that I think survive no matter what, that are already on sale. Because again, the bear case scenario is not my default. It's not my base case. It's just a possibility I want to be prepared for. Long answer, sorry, but the short one is just I would expect to be stopped out rather than to be, this genius that calls the market turn.
Yeah, that's perfect. And you've brought up liberty several times during this, which is appropriate for our channel. You mentioned in our pre-interview discussion that you're based in Puerto Rico, and just wondering if that factors into your liberty decision or your location decision, because one of the things that we've heard from a lot of viewers and we're all concerned about is the impact to the ordinary person and to their family and their livelihood and their ability to provide, to save, to hold on to things is their taxation level. And one of the things we've heard from Mike Maloney, for example, is that he can do what he does with a much more tax-efficient method in Puerto Rico. I think you spoke with us briefly about that the last time we had you on, but could you touch on that, the liberty impacts of financial freedom to hold on to what we own and how that's impacted your choice on where to live?
Sure. Well, that's absolutely what brought me here. My wife being from the Republic of Belarus, where they enjoy wonderful Russian winters for much of the year. She loves the sunshine and the palm trees, and even the iguanas are really cool in her book. Me, I'm here because of the tax breaks. And before we get into the benefits, I think actually the most important thing here actually is to stress a very key principle in political philosophy and liberty. I voted with my feet. It's a peaceful, nonviolent way of, shopping for governments or forcing governments to see me as a customer and perhaps adapt to me as a customer with not a shot being fired. I think this is profoundly important. I think it's ethical. I think it's a positive good in the world for people to vote with their feet. And I find it really interesting that millionaires and billionaires are fleeing California these days in droves. We got Musk going to Texas. Somebody else went to Texas recently. Ellison just went to Hawaii, not a low-tax jurisdiction. None of them are low-tax compared to Puerto Rico. But the regulatory and tax burden in California is, almost unmatched in the United States. You have to look at some of the city states with particularly nasty local laws to do even better. And so, not to go too long on that, but I think that's worth stopping and thinking about. People with money are voting with their feet and going where their money is treated better. I think that's fantastic. I would encourage anybody, even with a more modest means, to think along those lines. People voting with their feet is a discipline that any of us can impose on governments and should. We should teach them a lesson. And believe you me, this is the one lesson they can't ignore. If your state is depopulating compared to the other states, you got to ask yourself what's going on. If your whole country was depopulating compared to more friendlier jurisdictions, that you'd have to ask yourself what's going on. So I think that's really important. Now, in terms of the thing for Puerto Rico, there's a couple things there. One is if you have the right kind of company structure, then you can get a low corporate tax rate, which we enjoy. That's wonderful. But as an individual investor, you get a contract with the government if you get approved, which gives you a 0 capital gains tax rate, in my case, until 2036. And that's short and long term. So not only, imagine compounding that tax difference for any portfolio. A normal, you don't have to be a speculator like me, but even a normal investor, if you could take off that tax burden and then compound that year over year, this is enormously valuable. But on top of that, think about short-term versus long-term. I can move in and out of positions, right? I can have myself stopped out on an upside maximizer and not cringe too much because of tax consequences. If it's a short-term, it doesn't matter. My capital gains tax rate is goose egg on that position. So if I change my mind and I want to get back in again, I can dance in and out as much as I want with 0 tax implications. And now that you can trade for free, thanks to Robinhood, not just on Robinhood, on other platforms as well now, you can actually be a lot more, your liberty to deploy your funds in the most advantageous way is greatly enhanced by these measures. Now, I understand a lot of people, you can't move everywhere. Doug Casey, my friend, has been encouraging people to move to Argentina or Thailand or all kinds of interesting places for years and years. And it's difficult for a lot of people, especially if you have family obligations, to go too far. And so I like to suggest that Puerto Rico is expatriation light, right? It's still part of the United States. You're not actually leaving the United States. And that actually offers some comfort to some people. Now, it's not for everybody. I definitely think that anybody considering it should come here, get a feel for what the real Puerto Rico is like before they move here. I mean, you will hear Spanish spoken around you all the time, that sort of thing. But if you care about liberty and finance, I have to say it's something that you should consider because the benefits are real. The biggest right now is actually statehood. There's talk about making Puerto Rico a state. The Democrats would love to make Puerto Rico and D.C. a state. They'd get 2 more senators from each, and they probably would vote Democrat for decades or forever. I can see that. But it's not the sort of thing that happens quickly. It's also just not the sort of thing that a president could wave his hand and make happen. It has to be ratified. So that's the big risk. I don't see it as happening too quickly. And depending on your tax situation, it doesn't take long for a 0 capital gains tax or a 4% corporate tax rate to pay for itself.
It's very good food for thought. We've certainly seen even like Robert Kiyosaki and his wife Kim interviewing other experts about expatriation in different countries, and some are in the Caribbean or whatever, that you can get a passport and get a citizenship. Now, for your case, people who relocate to Puerto Rico, you still use a U.S. passport, still a U.S. citizen? So still subject to U.S. federal tax then?
Yes.
Okay.
But, well, see, that's just it. Puerto Rico and the U.S. Virgin Islands are exempt from the U.S. federal income tax. Now, that never mattered before. This has been true for 100 years, by the way. It never mattered before because Puerto Rico's own income taxes are just as bad. Right? So there was no real benefit. But after the crash of 2008, Puerto Rico's economy just fell flat on its face, never really recovered. This was all before the hurricanes and earthquakes and other things. And unlike Greece, they couldn't leave the Union. That was settled in 1865. They couldn't print their own money. So what could they do? They really had only one choice, which was, offer tax incentives. And, amazing how that's worked. I mean, there's a lot of money has been attracted to this island. I can't say it's perfect, right? There is some jealousy. There is some blowback. There are some people unhappy with it. But I think most people get it. I've met, I remember I had a conversation with the guy at the UPS package store, and I went in to mail off some forms for the tax authorities here. And he says, "You're one of those Act 2022 people, aren't you?" I said, "Yes." And I said, "Does that bother you?" And he looks at me and he says, "Well, did you buy a house here?" I said, "Yep." "Did you buy a car here?" I said, "Yeah." "Did you shop at the stores here?" I said, "Yeah." I said, "So what would I be bothered about?" So anyway, but it is not for everybody. I do suggest everybody do their own due diligence on here. If you have questions, send me an email. I can see if I can help you out. But don't dally. I mean, there is a threat that Puerto Rico could become a state or things could change. And, if you wait 5 years, these benefits may not be there.
That's very interesting. We're just grateful for your visit here. And we've been speaking with Lobo Tiggre, Louis James, the founder of The Independent Speculator. And we just appreciate you being here with us again on Liberty and Finance.
Well, thank you, Dunnigan.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today. To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Dunnigan Kaiser, my phone number, and my associate, Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.